And stocks in Asia traded higher today after U.S. President Donald Trump's announcement last week that tariffs would not be slapped on Mexican goods. Mainland Chinese stocks were higher, with the Shenzhen Composite rising 1.473%. The Shanghai Composite also gained 0.98%. In Hong Kong, the Hang Seng Index surged 2.03% as shares of Chinese tech giant Tencent soared 2.91%. Official Chinese trade data for May showed the country's exports beating forecasts and imports falling short of expectations, leaving it with an overall trade surplus of $41.65 billion for the month. Japan's Nikkei 225 jumped 1.03%, while the Topix Index gained 1.19%. South Korea's Kospi also rose 0.92%. Meanwhile, markets in Australia are closed on Monday for a holiday. And U.S. stock index futures were slightly higher in the morning as international trade continues to remain under focus. At around 2:05 a.m. Eastern Time, Dow futures rose 64 points, indicating a positive open of more than 76 points. Futures of S&P and Nasdaq were also seen slightly higher. Meanwhile, investors are closely monitoring trade links between China and the United States ahead of a key meeting between the leaders of the two countries. Outside of trade war, investors continue to remain worried about weak data from the U.S. data on Friday, showing the U.S. economy added 75,000 jobs in May, marking the second time in 4 months that jobs growth totaled less than 100,000. On the data front, there will be a job openings report and consumer inflation expectations published. On the earnings front, the calendar is thin, with only those industries and Yuxin due to report before the bell. And global commodities market, oil prices rose today after Saudi Arabia said producer club OPEC and Russia were likely to keep withholding supplies, and a relief that the United States and Mexico averted a trade war that would have damaged the global economy. Front-month Brent crude futures, the international benchmark for oil prices, were at $63.71, 42 cents above Friday's close. U.S. West Texas Intermediate crude futures were at $54.43 per barrel, 44 cents above their last settlement. And in the precious metals market, gold prices retreated from a 14-month peak in early trade after an agreement between the United States and Mexico to avert a tariff war crimped safe haven demand for the yellow metal. Spot gold was down 0.7% in the previous session. The bullion hit its highest since April 19, 2018 at $1,348 an ounce. U.S. gold futures fell 0.9% to $1,333 an ounce. And away from the markets and back here in Africa, a group of 30 international and local campaign groups have petitioned 2 banks to abandon plans to raise funds to build an oil pipeline to export Ugandan oil, saying the project would damage local livelihoods, water resources, and wildlife. The 1,445-kilometer pipeline, which will run from fields in the west of Uganda to Tanzania's Indian Ocean port of Tanga, is vital to developing the East African nation's oil reserves. South Africa's Standard Bank Group and Japan's Sumitomo Mitsui Banking Corporation are helping to raise the debts needed to finance the $3.5 billion pipeline. In a letter urging the banks not to arrange financing, the group said the project posed unacceptable risks to water, biodiversity, and natural habitats, as well as representing a new source of carbon emissions the planet can ill afford. And Egypt's annual urban consumer price inflation increased to 14.1% in May from 13% in April, a rise that analysts said was greater than expected and attributed to rising demand for food products. Prices for food and non-alcoholic beverages rose 15.1%, up from 13%. Katma said overall month-on-month inflation accelerated to 1.1% from 0.5%. Egypt is approaching the end of an IMF-backed economic reform program, during which inflation rose as high as 33% in 2017. Inflation later cooled, but rising food prices, especially fruit and vegetables, have kept pressure high. And ratings agency Moody's has lowered its forecast for South Africa's 2019 economic growth to 1.0% from 1.3% after it said a first quarter contraction had dented the government's revenue and policy options. Moody's is the last of the big three international credit firms to rate South Africa at investment grade. President Cyril Ramaphosa's efforts to revive Africa's most advanced economy were dealt a blow last week when data showed gross domestic product had contracted by a quarterly 3.2% in the first 3 months of 2019, the largest contraction in a decade. Ramaphosa's African National Congress is also in the midst of a row over the central bank's role, which has rattled financial markets. Analysts say if Moody's were to relegate South African debt to junk status, billions of dollars could leave the economy. And South African Airways is asking for a 4 billion rand funding from the government to survive the current financial year as it appoints an interim CEO to head the operation of the airline. Zukisa Ramasia becomes interim CEO after Vuyani Jarana unexpectedly resigned last week after less than 2 years in the job, saying his turnaround strategy was being undermined by a lack of state funding and too much bureaucracy. The revolving door of state-owned enterprises highlights the mammoth task South African President Cyril Ramaphosa faces to fulfill his promise of reforming state firms and winning them off government support. We'll take a break, and when we come back, we'll look at the latest development in Kenya. To stay with us.